Tell HR about it, Tavis.
Ladies and gentlemen.
HR.
Now that we're live, you can talk about it, Steve.
No. Ladies and gentlemen, welcome to the SoFi Weekly Show. Today I have with me Roy over here on my, what is that display for you guys? Left? Below me, Tevis from the Fundamentals of Investing podcast channel. I don't know. It's a very weird name. He's going to change it one day.
And no, you're changing your name.
Captain Referral.
Referral.
And then we have Stephen Fiorillo in the other corner, who is also named Dividend Streams, which he does on Seeking Alpha. I think most people that are actually in this chat know us pretty well. But yeah, how you guys doing?
Good. Not as good as you.
Last one of these for the year.
It's you. All right.
I have heard that Tanner has been promoted to captain now.
Yeah.
With a referral on the end of it.
I feel like we need to explain the joke. People don't get the
No, we don't need to explain the joke.
We'll just refer to him as captain. That's it. We'll refer
some people
to him
like to
as
have
captain.
inside jokes. So today we're going to be talking about some.
And for the record, I'm not the one that brought it up on live. Just for the record, so
it's true. It's true.
Tevis is true. It is
Tevis
true.
is taking risks. He's uninvited to the New Year's party that all the SoFi people are having in Toronto. Now, ladies and gentlemen, I want to be talking about members, products, financials, all this different stuff that we can go through for 2024. We did talk about the stock price and what we think will happen last episode, but this episode, we want to focus on mainly how SoFi believes that they can get there. We are, not professionals at all. We're just talking about some beliefs that we have following a company that we've been following for many years. So, yeah. Anything that anyone wants to say before we get started? Tevis, shut up, dude.
You didn't even say anything.
Yeah, Danny, we did invite to the show. He was busy. I was hoping to have like a 6-person panel today. But some people were busy at the end of the year. Something about spending it with family. I don't know. It makes no sense. No, I'm just kidding. No, unlike everyone else that has lives, we're here to talk about one very specific stock, SoFi. Potentially, it might even bleed into potentially PayPal for Roy if he not to excite him too much.
And Robinhood, maybe, if we get time.
Yeah, he's been pumping a stable coin on his Twitter account lately.
Absolutely. Accused and accurate.
Yeah.
Pay USD all the way up to $1.
Yeah. Maybe it fluctuates a 0.001 of a penny. Okay. First off, I just want to jump off with some immediate predictions just to get some of the juice flowing. Tevis, you put on your YouTube video that you believe that SoFi will break 10 million overall members for SoFi. You said that in 2024 that they would break 1 million members in a single quarter. Will that be on more of the back half or more recent? What do you think?
I mean, you can throw up the tweet and then we can pick apart my predictions and go from there if you want. But yeah, in terms of members, I think Anthony Noto has said that they're expecting members to ramp up in 2024 and 2025. I think 1 million members is definitely a stretch. It's a nice round number, but nobody thought we would hit 717,000 this year. Like, if we're being honest with ourselves, we were getting mid 400,000s, right, going into 2023. If any of us made a prediction to say 700,000 members, that would have seemed insanity, and yet they did it. And so I do think that the pieces of information that we know is that they're going to be ramping up members. They're expecting 800,000 to 1 million members consistently every quarter, possibly in 2025. And, I think we could have a really good quarter in 2024 as well, where they could just add 1 million members. I mean, I think the average is going to be around 700,000. around that range. Maybe next quarter they add, something in the 600,000 member range, and they scale up from there. But I don't think 1 million members is like, it's a long shot still, but this company has proven time and again that they can beat expectations pretty significantly.
Right.
So partially for me, it was, a nice round number to aim for, but I also think that it's achievable. And on that same vein, if 1 million member quarter is achievable, then I think 10 million member year is also achievable, because for us to get to 10, we need to add 3 million members in 4 quarters. If we add 1 million members on one of those quarters, then you're basically there already, right? Because you're averaging, let's say, 700K, members. So yes, the predictions go hand in hand. And yes, if I realize that if we miss one of them, we're probably going to miss 2 or 3 of them. But by that same token, if we're hitting one of them, we're most likely going to hit multiple. I think it's going to be a favorable year for SoFi in 2024. From a new members perspective, I think the growth in financial services is going to be the primary driver of new members in the new year, especially with rates coming down. So, I do think that, as well as the brand awareness for SoFi, like we've seen so much unaided brand awareness this year. I'm not talking about just the TGL stuff, but even the concerts at SoFi Stadium. We've seen like all the way to the Kathy Wood and Elon Musk talking about it on a Twitter Spaces. Like SoFi's name is being mentioned more and more. Just this week alone, there was multiple segments on CNBC talking about SoFi, obviously from a stock perspective, but all of those things play a part in terms of the unaided brand awareness around how many people have heard of the SoFi brand in everyday life. And really, it's a function of management as well. How much do they want to spend on sales and marketing? How much do they want to spend on that customer acquisition cost? And I think that it's achievable. I don't know. Those are my member predictions. 1 million any quarter in the next 4, and 10 million overall by the end of 2024.
So by the end of 2024. Okay. So when I looked at your predictions, I thought it was through for the next 4 quarters. So 10 million, I think we're going to still fall under a little bit. And I don't think we're going to hit the 1 million mark. Main reason why we did so well in the previous quarter was one person. And I think you know who I'm talking about.
Swift.
Yep, she's amazing. I mean, she's Time Person of the Year. Should be, if SoFi has the Employee of the Year, it should be Taylor Swift. Let's be honest. Yeah. Not Anthony Noto, not anybody else. Taylor freaking Swift. She's an amazing marketer. And you can see how much SoFi ramped up, and probably the cost acquisition actually was quite nice that quarter too. So I don't think, unless she has a similar event, and I don't know of one. I didn't see anything, but she could surprise folks lined up that we're going to see the same thing. So I'm looking at, and I'm seeing about 650,000 people per quarter. I think we fall just a bit short, under 10 million. But I agree with you. If there is a quarter that's an aberration, and Taylor Swift just starts wearing SoFi stuff and does a SoFi show and SoFi concert, or she changes her name to SoFi, then yes, we're going to absolutely have that 1 million person quarter. We'll have 10 million. As far as the number there by the end of 2024. But otherwise, I don't see it.
I think Roy, absolutely agree on the Taylor Swift aspect. But really, I think it's all a function of SoFi Stadium. And they're still going to have SoFi Stadium in the new year. And SoFi Stadium is really a call option on the number of members that they can, garner. And the reason why is because it might not be Taylor Swift in the new year. It might be number 2, number 3, and number 4 in terms of popularity from the top artists. Hell, it might be an NFL game that she just goes, as a viewer to support whoever she's dating. So my point is, the stadium is still going to be there. The stadium is still a driving function of them adding more members, and just that alone is like that X factor, is that unknown variable that can get them over the hump of the 1 million member mark. Obviously, it's a stretch, but it's an unforeseen variable, and that's what I really like, is that this year it was Taylor Swift, but really it was the SoFi Stadium. Nobody was predicting The Weeknd's new album called Live at SoFi Stadium, right? Now we have the next Super Bowl that's going to be there, World Cup, Olympics that's going to be there. This year alone, you had, in addition to Taylor Swift, you had Beyonce, you had Ed Sheeran, you had all of these different artists, and all of them, all throughout that performance, people saw SoFi branding everywhere. So it's a huge factor.
I would just say though, the events that you named won't be in 2024.
Yeah, but there's going to be new events, is my point. The stadium in itself is one of the most attractive and one of the largest stadiums in the US, in the whole Western Hemisphere, I would say. So that in itself is a magnet for all of the attention of the top artists and performers in the world.
Yeah, Taylor Swift, though, is just so far out there that you can add up, I think, every other event that's happening for the rest of the year, and it's not going to hit the hype and the pull as far as between that movie that she had that had SoFi Stadium all over it, and of course the actual concert. And the other factor is I think that they're going to try to keep, at least for the first couple of quarters while they have that narrow gap profitability, the cost of acquisition down maybe lower than they would in a typical environment. Robinhood's kind of doing the opposite, where they're not going to probably not going to hit gap profitability anyway in quarter four, so they're just going for it. And you can see through a lot of initiatives that they're doing, they're just all over the place. And SoFi, I don't see them as being quite aggressive, and they're not going to have that free pull from Taylor Swift. So would love to be wrong. I just don't see it.
If I could just bring up a comment really quickly, I think I just want to address this. Tom said, lots of stadiums are named after banks. I think that you guys are overblowing this. I think that a lot of banks have a lot of customers, and that it's been a proven way to get brand recognition out there and for people to trust the brand name. I don't think that we're saying that SoFi is doing anything revolutionary here, but they are following in the footsteps of companies that know that it is a working system, right? So I don't think that that is saying that we're overblowing them. We want their customers. We have a bigger stadium. It's just going.
No, don't say that. That's not the right way to address that. The right way to address that is SoFi has an advertising and marketing budget. They are allocating a certain amount of money of that budget towards SoFi Stadium because they feel that's going to be their largest ROI. And that is going to, in perpetuity, get the name out there. It'll be in replays. It'll be in concerts. It'll be all over the place. It'll draw in, when the younger crowd comes for events, that's their demographic. So they are looking at this as where's their best place for advertising dollars to go, and this is very high on the list. So don't go down the road of bigger bank or anything like that.
I think that all other banks, like what Tom is saying, though, also see those benefits of being in the replays. And
so I think to meet in the middle, I would argue, just making a logical leap, that for SoFi, it's so much more of an attractive pull versus like Wells Fargo, for example, because SoFi is so small and because, let's say on an aggregate number, the same amount of people see Wells Fargo's stadium or their brand on that stadium as they see SoFi's name on a stadium. The difference is Wells Fargo has like orders of magnitude more people. And so if on an aggregate basis, the same aggregate rough number of people see it, then as a percentage, it's much higher for SoFi in terms of the probability for them to land some of those customers. And as a result of that, it has a much bigger pull in how fast SoFi can grow just because it's so small right now. And the awareness is so small for that entire brand. Whereas everybody knows JP Morgan, everybody knows Wells Fargo because they're giant, established legacy players.
Yeah. I wanted to continue on this members trail here for a sec. I recently put out a video today where I said that SoFi would bring on about 2.4 million new members for 2024. That's averaging about 600,000 per quarter. Definitely a lot lower than, potentially bringing on 3 million, which I don't actually think is unachievable. I just wanted to be more in line with what management had said, which they do play extremely conservatively. So I think, my goal and Tevis's goal were a little bit different, where he's trying to hit the nail on the head. But what Anthony Noto said in the last quarter was this. I'll just read the quote out exactly. Said, in the terms of the outlook for member growth and product growth, What I'd say is we have largely been averaging around the 400 range for members. I wouldn't start assuming we're going to average over 600 or 700,000 today. I think we could start focusing on 500,000 plus members in a quarter and keep it at the 5 handle for now. We'll see how the quarter goes and what we're doing overall. So I benchmarked a little bit higher than the 500,000 mark, saying, it's probably closer to 600,000 because SoFi does overperform, but I don't want to, double those expectations either. Like, now, one individual quarter could be in the 400,000s and another individual quarter can be in the 800,000. So I absolutely think that you're right, Tevis, in the idea that there could be a slam dunk moment where SoFi puts its name in or has some type of sign up initiative or something like this that can get a large amount of people onto the platform. But for now, I just want to play it more conservatively because I do think that SoFi's goal, even into 2024, is still focusing on profitability. It's improving those margins,
Yeah, absolutely. I'll just say 2 things to that, and I think the truth might be somewhere in between our predictions of where can they go. The reason why mine numbers were so far detached from what analysts out there were saying, like for you, for example, the incremental sort of increase that you gave them on what is the factor that they're sandbagging was very small. It might have been like, 10 or 15% higher, whereas I would be closer to like 30 or 40% higher because this is a company that hasn't missed a single top line, bottom line, or guidance raise in like 2.5 years. JP or Noto, coming from his Goldman Sachs background, like he is an expert at playing the Wall Street game in terms of sandbagging those expectations and then going above and beyond. And so I'm really approaching it from the place of, it's predictions, but it's not really predictions where I'm aiming to get all of them correct. In my mind, I think to myself, if I can get half of these, then we're going to have a terrific year because these are all sort of aggressive, like wish list items or mile markers that if we hit in 2024, they can be great. And so they're aggressive by design because, if all of them hit, then we've had a blockbuster, spectacular year. But honestly, I think if 60% of them hit, we're still having a terrific, out of the ordinary year.
Can I just bring something up? Secretly, Roy tried to shove this under the radar. 95% chance I become one of those new members in 2024. Roy, you have a couple days left. Just make a relay account. Do something.
Nope. I want Tevis to be right and this to count in the 2024 members. So I'm not going to do it right now. We're just
If we miss this quarter, you know who to blame.
It'll be me. If we miss by 1, if they were that exact, yeah.
Yeah, but it's the momentum. When people know that you sign up, then hey, we've reached potentially 230 plus people in the chat that all go, oh my God, Roy signed up. Now I want to sign up. They go tell their friends and family, guys, you won't know what Roy just did. And then you see how it kind of happens. You affect hundreds of thousands of people.
Exactly. I think that once I become a SoFi member, probably Q1 might be Q2. I'll change my handle to Captain Referral and I'll just start pumping that.
You're not allowed to. That needs to be Tanner.
Is that trademarked? Oh man,
it's already taken. Look at can you throw up Danny's comment? Danny's comment is making me sweat a little bit. 3.5 million new members in 2024 minimum. That is my bear case. Danny says. Okay, so just to ground everybody, SoFi added 2.2 million members in 2023. I think, Tanner, your estimate of 2.4?
2.35.
Okay, even less than 2.4. That's like less than a 10% improvement on the members that they added in 2023. I think that's like
sorry. Can I make a correction? I meant in 2023. Sorry. You might be correct. In 2023, there's an expectation that they'll add about. Actually, I take back everything I said. I see what you did. You did trailing 12 months. I'm not doing trailing 12 months. My bad.
Yeah. So
before you change anything, I think you're being very conservative.
Tanner.
I'm going to go higher than Tevis.
Okay.
I think Tanner's being conservative. I'm looking at the member chart from the Q3 presentation. I'm going to say 3.2.
3.2 million. But what about Anthony Noto's quote? The 500,000 new members a quarter.
The way that you're Captain Referral, he's Captain Sandbagger.
Noto doesn't know what he's talking about. Come on.
Noto's a sandbagger. We all know this. No,
Henry, can you throw up B-Dubs' comment? You might have to scroll up just a little bit.
I'm surprised, honestly, that people don't call Noto a bear. Like, sorry, say that one more time. Who am I looking for?
B-Dubs at 1016. Go up 1016. He says, that's too light, Tanner. I have a thought for you. As the Fed lowers rates and SoFi holds the APY at 4.6%, this will draw even more customers over to SoFi. And I think that's a really good comment, right? Because we know that SoFi has the pricing power to keep the rates higher the APY is higher for longer. And so as some of these other banks are basically forced to go in lockstep with the Fed as they're lowering rates, we know that SoFi has the ability to keep them higher, which will be an enticing factor for new members coming onto the platform, which is also, an unforeseen aspect of them having added members. And look, I think at the end of the day, SoFi has so many irons in the fire that just a few of these need to come through, and you can hit that prediction that you previously thought was, way too bullish, that is never going to happen, because there's all of these little nuggets of that ecosystem playing together that can get that company there.
So I said something very similar last night on Finance Junkies when those questions started coming in. And we know that savings accounts are getting the bare minimum from the big legacy banks. And as the rates start to come down, I couldn't believe how high the percentages of a rate cut in March is now from CME Group. SoFi is going to have the ability to hold rates higher for longer and come down at a much slower pace, which will make it even more enticing. But you also need to think about student loans and how many people are looking to refi and how many people are going to be refining next year. And we're probably going to get a percentage of them becoming members with accounts or direct deposits. And when you look at the member chart, if you bring up my screen, there's a path to averaging 800,000 a quarter. We still don't have Q4 numbers yet. Hypothetically, let's just say Q4 falls somewhere between Q2 and Q3. Let's say it falls in the 630, 640 range. Hypothetically.
Yeah.
It's still a significant increase from what we saw during 2022 with a 4 handle on the front. If this keeps going up, they could average 800. We know where their goal is for the next year, and if it exceeds 700, exceeds everybody's expectations in Q4, it really could have a platform for breaking 3 million additions next year.
I don't see 7 quarter 4. That would be great, but
We'll
I think we're more likely to see 5s than 7s actually. It just based on comments from Noto, we don't have Taylor Swift this time, and the student loan stuff. I mean, that's been pushed on the back burner. There will be some folks that will refinance, but a lot of them are going to be waiting until they absolutely have to start repaying, and they're waiting for those lower rates. So I think that you're right. Quarter 3 and quarter 4, the cost of acquisition is not going to be that what they're paying attention to at that point. They'll be able to hold the rates higher for longer, and then you have student loans. So quarter 3 and quarter 4 next year will be phenomenal, I think, but we're just not going to see that this quarter. I don't expect.
One other thing to keep in mind is that this thing snowballs pretty heavily. One of the things that they mentioned in the Q3 earnings call was the cross-selling that lowered their customer acquisition cost and also contributed to higher member counts, because you essentially have new members coming in through low barrier to entry products like Relay. It doesn't really cost you anything. You can start with Relay, and then from there, once you're into that ecosystem, they can cross-sell you to other products. And I think that the higher basis of members that we're seeing now, like even the 700,000 in Q3, maybe 650 in Q4, or 600, let's say, in Q4, towards the back half of 2024, we're going to see those snowball, where those people are referring more people who are referring more people, where the 1.5x products to members ratio is holding true. that is also another factor that can snowball those member additions to the back half of the year to be far in excess of what you would linearly extrapolate.
Can we
All right.
discuss the video that Tevis posted?
Is
Which one?
that, what
The
video?
CNBC one, where this analyst said the best things that we talk about in one clip on CNBC, and it is one of my favorite things at the moment because he is the first one outside of a SoFi employee to even say banking as a service.
Yeah, that was a good clip. It's
It
only
was a great clip. It wasn't a good clip. It was a great clip because people underestimate what banking as a service could and probably will be. SoFi has the potential to be the AWS of fintech, and that is what's going to get us a tech multiple. And if there is a big partnership coming down the pipe, whether it is, I don't want to name any companies, but whether it's who he said or a different one, this could take off. And I do think that there's a good chance that if they announce who the large regional bank is, and I don't know if they are under a non-disclosure or not, but if they say that, I am sure that they're probably saying it in the RFP stages with the other ones, but the combination of them actually having this product and then announcing some big partnerships on that side could really jumpstart a lot of business on this. And they're going to be so far ahead of anybody else that it's going to be their game to lose at that point. I honestly think it is their game to lose because I think they are so far ahead of everybody else that they have the trifecta. They have Galileo, they have the bank platform, and they have the bank charter so they can sponsor everything. Like nobody else has the back end like that.
Do we want to roll this clip?
Yeah,
I
Tanner,
think
have
we
you seen it?
should.
I mean, we can. I
It's
didn't
3
think it was a
minutes.
mind-blowing clip. I think you just said everything that was on it. Really, it was only like 3 minutes. I actually was trying to get Malcolm onto the SoFi Weekly because it's not the first time I've seen him. I've emailed him before. He's been on the SoFi train for a while. So all the way back whenever this stock was around $6 is whenever I had heard about him. So I can bring it up here. Bear with me though. I did want to just touch on that because I do think that those things make sense. I just don't want to be overly bullish whenever management is saying other things. Like they said, products per member is going to stay around 1.5 products per member for multiple years. Like they don't think that they're going to scale that for a long time.
Yeah, but banking as a service and products per member are two different things.
No, I know, but we brought up a lot of points since I last talked. I'm not talking about banking as a service.
Yeah, but like the base is going to get bigger. The 1.5x is going to mean more because you're talking about an aggregate base that's bigger.
I know. I just I do believe that network effects are happening at SoFi. However, the consistency of the members that have been brought onto the platform, looking at between 400,000 and 500,000, seems more like paid accounts coming onto the platform rather than something along the lines of organic growth, like where you see sporadic and viral growth in members like you do on Robinhood, where one quarter they can bring on a ton and then the next quarter maybe no new members just based on virality of the actual platform. You really don't see that on SoFi. It's part of the reason why I like the platform so much is the company for the most part has been extremely linear. Well, not necessarily linear. There are definitely exponential factors, but I mean, it's trackable. But
Can we make t-shirts?
you can do whatever you want.
If I make t-shirts, I'm going to make t-shirts. This is what we're going to do for 2024. I'm going to make t-shirts. I'm going to send it to you guys, and we're going to wear them during the podcast. It's going to be "In Noto We Trust" with a picture of him.
Everybody gets one except Tanner because he's the bear.
Yeah, make a different one for me.
Yeah, and I always say his name wrong, but in Chiaverini, we trust.
Yeah, the Chia Pet.
Or SoFi to $3.
As Danny Deals would say. I wanted to talk as well about another big thing here. Where is it? So one of the predictions that I had kind of not taken from management that I kind of neglected was the 50% revenue from lending versus 50% from the other technology platform and financial services. Do you guys think that that will be the case in 2024? And how do you think that SoFi will grow? Do you think it's all financial services, lending? Where do we find it?
I think technology platform is going to surprise to the upside. Like they've done well. I think they've underperformed, over the last year as a whole, but recently they've started accelerating. I think that in an area where it's not as scary, you're not looking at major recession or anything like that. Interest rates, banks know where they're going to be at, and they know that they need to start working on changing their technology. Galileo is going to do very well. And so that the tech platform, I think, will have a surprise to the upside, and we'll see we'll see a very different SoFi in the next coming years as far as that breakdown.
Yeah, I think from the lending side, student loans is we're going to see the majority of the originations of the growth. I think like I said before, the financial services aspect is going to be a high grower. Some of my predictions center around Galileo validating the pilot programs that they have underway. So they might see a substantial increase in accounts that people are not expecting. And I think that we're going to get closer to that 50-50 split, but it's still going to be predominantly lending by the end of 2024, but not so much as it is today. Like we're going to move towards 50-50, but it's not going to be exactly 50-50 by the end of 2024. It's going to take a little while to get there. So
what are we thinking SoFi will bring on for new members in not only 2024, but even next quarter in Q4? So I'll tell you guys the last 3 quarters. The last 3 quarters, in the first quarter, Q1, we lost almost 4.4 million members due to our client Current jumping off the platform. Then in Q2, we added an additional back 3 million. Then the next quarter, we added 7.4 million members in Q3. What is Q4 going to hold? Do you have any predictions, Stephen, on that? Or
I'm looking at t-shirts
total
right
of
now.
technology.
Steve's looking at t-shirts.
Okay, Tevis.
I'm sorry, I wasn't. You're talking about next quarter predictions for members?
Yeah, next quarter, and then also 2024. If you have any expectations for Galileo.
Oh, for Galileo. Yeah, look, I think next quarter, what I'm expecting some guidance from management on the call to basically give us an update of where they are in the pilot programs. I'm not expecting the pilot programs to be validated by next quarter. That's going to be more of a Q1 2024 thing around spring. So whenever that is, February, March, April, I guess, 2024, for Galileo to see the big jump. Keep in mind that management did say that by Q4, the margins on Galileo, as well as the accounts on Galileo, as well as the just contribution to the revenue mix in general, would all be going up. You had that little hiccup with Current, and you had the sort of on-prem to cloud transition. You had the integration of Technisys, where they had to cut some redundancies in the platform. But what have we seen? We've seen for the last quarter, Galileo has been straight churning out product after product after product, almost on a weekly basis. And so, I think that Galileo has a higher barrier to entry. It's a little bit more complex than the traditional SoFi business because it's B2B, it's not B2C. And we know that management has said at the beginning of this year that they're now pivoting their strategy from smaller clients that have quicker lead times to larger clients that are more secure, they're more durable, they're more sticky, but they also have a longer lead time. They need a longer period of time to close this deal. And look, I'm somebody that works in B2B SaaS myself. I know some of these deal times can be, 3 months, 4 months, 5 months of just going back and forth, just integrating the client's IT teams with our IT teams to make sure that this platform works for them. It takes time. And it also takes incremental amount of time when you layer on top the fact that these are legacy financial institutions. They're dinosaurs that SoFi is working with. And so I think the win for me in the next quarter would see, an upward trajectory for those 3 metrics, the percentage to the revenue mix, the margins, and the total accounts, but not necessarily a huge jump. I think the huge jump is going to come in the first quarters of 2024, because then we'll have a full 12 to 15 months where the pilot programs are validated, because I'm imagining it's going to take them 12 to 15 months just with a program to validate itself. And then you tack on another maybe 3 months on top of that for them to finish, the paperwork and all that, and then to do the integrations and then start migrating over all the legacy accounts. And so this takes time. It takes a year and a half probably. And that corresponds to about summer of 2024.
But you're putting that start date when?
I don't think what do you mean start date? I don't think there is like
because if you're saying the deals are 12 to 15 month sales cycles, when did the date of the sales cycle start?
No, I'm saying the pilot program itself is going to be like a 12 to 15 month, like a 12 month, like, hey, we'll try it out for a year and let's see how it goes.
Yeah.
And then at the end, there's going to be an incremental 3 months where they say, oh, okay, like this worked. We want to get that started. So the actual sales cycle might only be 3 to 4 months from sign off on the pilot program all the way to, okay, let's start migrating over all our legacy accounts. And so a year, I'm saying by January, hopefully that pilot program is validated. And then by the time we're going to start seeing that account uptick reflect in Galileo, it's probably going to be the summer.
Right.
I was trying to find the first mention of that. Do you guys remember approximately when that was? I know it was before I was an investor initially, but
beginning of this year.
It was the beginning of this year? Okay.
It was essentially that quarter where they lost current and they were talking about like what's going to happen with Galileo. And I think it was towards like April, like the JP Morgan fireside chat where Noda was talking about their whole strategy about going after bigger clients. So, I definitely think summer of 2024 is around that ballpark when I would expect it to be coming.
I would believe it would have started whenever Technisys was put onto the Galileo platform. Like their name disappeared. They became one company. One of the things that I believe is that they said that acceleration was going to start in Q4. That's why I'm a little bit excited about Galileo even in this year. I placed an 8-figure number on new accounts for the technology platform, assuming that they have signed a large client at around 11 million new accounts. Now that's the hardest prediction I've been able to try to judge is the technology platform. It's the one that I'm always the furthest off on. But if I'm assuming an acceleration, I'm also assuming a technology platform average revenue per account also increasing, because if we have existing clients that might have been on the Galileo platform now also being integrated on the Technisys platform, that's increasing the value per client that we have. So I think it'll be a great quarter next quarter, but probably even better into 2024 as we're talking to multiple clients at the same time.
So that also is going to accelerate though, because there's a couple things we don't know. We don't know how many legacy financial institutions are piloting Galileo. We assume like just one, but it could be multiple. And so while the first one might be validated and reflecting in the financials as early as this quarter in January, you could have others that are
right,
midway through the progress. And then the second thing to keep in mind is that every year contract renewals have built-in escalators, so the price increases every year. It's just typical software as a service, B2B business, especially with all of the product introductions that Galileo and Technisys, the combined entity, has rolled out. And so you're going to see this margin increase over 2024 naturally, just as some of these contracts start renewing for Galileo and you have price increases all throughout.
Anything between you guys on your beliefs for the technology platform before we move on?
Yes, it's going to be big.
But is it going to be big as soon as next quarter or next year?
Next
and
year,
by next quarter, I mean Q4, the one we're about to end right now.
So I think that there is potential for it to have some impact next quarter, depending on what the commentary is and depending on what they can say. If they can give some commentary and some color around how far they are in these RFP processes, who they signed that we know is a large regional bank, and what the roadmap looks like and what the plans are, I think that there will be some coverage about it and people will start to really take it more seriously. I don't think people are taking it that seriously at the moment. And I think over the next year, as more news comes out and they start publicizing the wins, and if they can sign up some pretty big clients that will generate some buzz, it'll get other banks to start looking at it. You have to remember that new regulations are coming. Banks want to move to a cloud first platform. SoFi has the entire back end, and this is the thing that separates them from traditional banks or fintech companies. This is their differentiator, and it is what can get us the tech multiple and reoccurring revenue from their opponents. Like, this is all or nothing right now, and this is what's going to differentiate it. Like, people underestimate how big this could be.
Yeah, no, I'm a big believer. I'm a little bit disappointed with the technology platform not having more tools than some of the competitors are coming out with and catching up. Like in credit cards, you're seeing Robinhood, instead of deepening ties with Galileo, they have resorted to acquiring a different company that will then do their credit card platform X1. You saw Marqeta buy Power Finance, which was their credit card platform, which is now allowing them to go after our own clients for them to spread credit card products. I don't know where Galileo is lacking there. Obviously, it's much more complex than I'm giving it credit for. But if our competitors are doing it, it's something that we need to do. There's a large amount of money to be made on the credit card platform side. And not only that, we need to improve SoFi's own credit card. So there's definitely improvements to be made.
Yeah, they have work to do in that. But, they have other products too. I mean, plenty of them that they're coming out with that are good. The buy now, pay later as a service, that's something that's relatively new. That's all the rage right now. And it wouldn't shock me, if somebody's looking to onboard through that, just because, all these competitors are offering it. They're growing it. We're seeing major partnerships like with Affirm and Walmart. If somebody was thinking about it, man, they got to ramp that. And the best way to do that is through SoFi.
One of my other assumptions is that some of their product releases can be as a result of the requests that they're getting with existing pilot program, potential clients that they're working with. Like if you have RFPs with Galileo, and let's say Galileo behind the scenes is talking with, I don't know, Wells Fargo as an example. Throughout that process, they're going to be in constant communication in terms of what they like and don't like about Galileo. And as a result of trying to win those big behemoth legacy institutions, they could be prioritizing what these big, RFPs are requesting, or these big companies are requesting, and deprioritizing a lot of these other things that you're seeing in the market right now, like credit cards, for example. And so if you think about why did they prioritize buy now, pay later over credit cards? Like, clearly credit cards is the winner. It might be as a request of some of these bigger clients to onboard onto Galileo in the first place. So that's an aspect that we don't see necessarily.
So share this. I'm going to make it bigger. Oh, it's big enough. So this is Truist's Q3 presentation. I think I showed this a previous week, but this is all you need to know, that one of the largest regional banks is taking digital very seriously on all fronts. The mobile app users is big. Digital transactions are up. I mean, they're making a big push into this because they know that this is the future. All the other banks are probably following suit. And I still say, I think that this slide makes me think that they're the ones that are utilizing SoFi's platform, because Noto specifically said large regional. Truist is one of the largest. Their numbers are going up. It could make sense. And I think that this could be such a big thing in the future that we can get a tech multiple or a hybrid multiple. And this is what gets us to a top 10 financial institution, or helps us get there. There's a lot of things that are going to get us there, but this is going to help a lot. And it's going to differentiate the revenue which is something analysts are going to love.
Are you sure it's Truist? I see Zelle transactions there. I don't know. They might be staying far away. Who knows?
What do you mean?
No,
Zelle is part of digital banking, is it not?
Yeah, but it's something that SoFi needs to integrate with, and they haven't.
And they've said that it's coming.
Yeah.
This next year, according to Tevis. The man tells no lie. That's one thing I agree with them. They've been talking about it a long time. If they don't get it done in 2024, I don't know what they're doing. It's got to happen.
I'll just be honest with everyone. Zelle integrations was on a lot of our predictions for 2023. Let's just be honest. That was on Bender 9000s. That was on mine. That was it is delayed. So, yeah. Yeah, but Zelle is used by all the big banks. Yeah, well, that's why we need to use it. People pay their friends on a platform that they know. Okay. If you want to use those platforms, you need to make it an easy transition from what they used to use onto what they now will use. Here in Canada, we have a really, really good payment system that one of the fintech banks had created called Wealth Simple. They have this payment platform called Wealth Simple Cash. Nobody uses it because you have to be on it to interact with anyone else, right? That's just not where everyone is in Canada. They're not all on Wealth Simple. Even though it's an amazing platform, it's just being used by very little people. So it kind of makes the traditional places like Interact or for in America's sake, SoFi can't build a new peer-to-peer payment system because there's the incumbents are already so large already. Zelle, Cash App, Venmo, people know where to pay each other.
Yeah, you wouldn't want to. You want to piggyback off of it and make it where it is seamless, just like you said, for the simple fact that now you can transact with anybody that has that capability.
Roy,
and just real quick, Tevis, unlike Venmo or Cash App, what was so great about Zelle is that you don't have to get off your bank to use it, right? So you can enjoy all the features of high APYs and all the features that, SoFi can be offering you on their digital platform while also having a great peer-to-peer payment system. Go ahead, Tevis.
I just want to pivot. Roy, what did you not agree with the predictions that I made?
We already looked at the 1 million quarter, the total member growth. SMB loans, I don't think is going to be what you think. And then the acquisition, SoFi acquiring somebody, I don't think that one is right.
Yeah, so maybe let's talk about that. So the two that I made was that SoFi is going to acquire a company, but also that SoFi is going to get some serious M&A attention in 2024. So they're going to get it from sort of both sides. Maybe we can just spend a little bit chatting about that.
Sure.
Yeah, I don't want it to happen.
Yeah, I don't think it'll happen. I think that there will be interest. So,
yeah. So here's my justification for arguing that there will be increased M&A attention, because this company will now be profitable. It'll be high growing, and it'll be starting to get up there in terms of the actual revenue that it's doing, in terms of the members that it's bringing on. It's going to be more prominent of a name. And I think that profitability really lends credence to that idea that these legacy institutions can now look at it a little bit differently, especially because that's also going to start to bolster the stock price up a little bit, probably add a floor to the stock and add a little bit more sort of credibility in general, so that it's not so much at the whims of short sellers and all this manipulation. I do think that the tech platform is going to be more prominent for these legacy financial institutions. It can align with the timelines around the RFP processes coming to an end. Maybe these legacy financial institutions are saying, oh, wow, like Galileo, we've tried it out. It makes sense for our use case. How much is this company after all? How much do we need to pay for this company? So I think all of these things converging on the same year could lead to increased M&A chatter, whether it's rumors, whether it's a flat out offer. I'm not sure, but it's much more probable in my mind this year than it is, than it was last year.
So think about the road Noto took. Instead of doing an RFP process, they just went out and they purchased Galileo. They didn't want to be at anybody's whim. They wanted to own the tech so they could bring to market the products they wanted to when they wanted to, instead of having to wait for a roadmap, make phone calls, and tell them that we're going to leave if you don't get this done, or whatever the case may be. Same thing happened with Technisys. They didn't want to just sub it out to somebody. They acquired the company. So you could see the same exact thing happen with SoFi on the other end. And this is what I'm afraid of, that they are in talks with several large banking institutions about their tech platform. And one of these big guys says, how much is the market cap? We could just pay cash for them. That's what I don't want to happen.
Same.
Yeah,
But it could.
We all know.
Oh, of course it could. I just
sorry.
don't
We all
want to see
know
that.
that Noto is super against selling. That won't really stop the interest from the market.
Oh, and it's not Noto's choice if they sell or not.
Yeah.
I mean, he has a fiduciary obligation to do what is best for the shareholders. And if they get a large look, if somebody was to come to them now with a $30 offer, and I'm not saying that this is going to happen, but I'm just saying if somebody came to them now with a $30 offer, the board would have to take that so seriously because it's a 200% increase.
Yeah.
Like they would have to take that so seriously, and the deal would probably get done. I
Not-
even think a 24 offer would have to be taken very seriously.
Not only that, but like look at what happened with Twitter, right? The biggest enticing factor for the board of directors at Twitter was that Elon offered them basically the highest stock price that they'd ever seen. You know, like past the all-time highs of what the company has traded in public markets. And so if SoFi got a $30 buyout offer, it'd be really, really difficult for the board of directors to say no to that and justify that to shareholders.
Yeah, and just to be clear, we're not saying that there is an offer. We're not saying they're going to get an offer. We're just saying, or I'm just saying that if an offer was put on the table at these numbers, the board has a fiduciary responsibility to act in the best interest for the shareholders, and they would have to take it very seriously.
Yeah, you remember whenever Elon was trying to buy Twitter and they said, we're not selling. And then people said, well, you might not be allowed.
You may not have a choice at some point.
Yeah.
Especially if he just buys every share on the open market.
I think SoFi is just a retail favorite and it's going to get squashed like a bug.
Good luck.
Says Michael, the same guy that thinks that a company can acquire them for the exact same market cap that they have today. Oh, wait, sorry, one more. The same guy that says the banking side is the waste of time. They need to focus on the tech. I'll save it to a really short sentence. You should look at the margins on the tech platform. Maybe going forward, you're in the high 20%. Look at lending in the 60%. People want to brush off the idea of banking because it's boring old banking. They make a lot of money. Banks print.
And it is something that every person needs. This is not a Netflix subscription that is a luxury item that is outside of the normal scope. Everybody needs banking. Banking will always be here. There will be enhancements to it, but it is not going away ever. And it's not just putting your money in a bank. It's all the services that come along with it, from credit card to loans to mortgages, everything, moving money around, investing, never going away.
And the other thing is, this is a lot more resilient business now. And I don't think that they want to go back to basically being a one-trick pony. They'll sometimes have the business firing on all cylinders, but how they were before COVID, they should have died. Student loans were cut off. That was most of their revenue. That was it. But instead, they've diversified. They're going to have multiple streams of revenue. And so if they go through another COVID-like event, they don't have to try to pivot and execute like crazy. They can just say, you know what, we're diversified. We're fine. We have multiple revenue streams. We'll weather this storm. And of course, they'll be profitable at that point anyway. But they will always, I think, they'll just be adding to these vectors. They won't be decreasing.
I want to just answer that one question that they keep asking in the chat. So the way that a low offer gets 86th is very simple. Let's just say somebody came in. I don't know what's SoFi's market cap right now, 10 billion around?
Roughly, yeah.
Let's say somebody came in with a $12 billion offer. SoFi has every right to say no, and their reasoning could be that we are going to be profitable. We think shares are going to go up by X amount. There's more value to shareholders if we stay our own entity. And they can use that logic to a certain point. You start getting into the 20s, mid 20s, upper 20s, it then becomes the conversation of what has to go right, what has to change on the street, what does the macroeconomic factors have to be to get this stock there, and what do we actually think from a time frame? In addition, because SoFi could get there at some point, what are the synergies between us and the acquiring entity, and what value do we bring to them that would make that entity go up for our shareholders, since they would be getting most likely shares of the new company? There's a lot of things that they would have to discuss, but that's how a low offer would get 86.
Yeah, even at the $20 range, they still have a very good argument to say no, because keep in mind the stock was trading for above $20 at
They
Exactly.
do. But you start getting into that upper area, and that's why I said 30 originally. You start getting there, it becomes a much different discussion at that level, especially if it is a bigger regional or a financial institution. I'll say a name. Let's just say Citibank. Okay. Somebody like them may make sense at some point for a certain number, because Citibank trades at such a low value to their tangible book value that SoFi's platform on theirs could make sense. But otherwise, it would. I don't think a buyout makes sense for them.
The one company I said should have bought out SoFi, and I think it was a big mistake, is Wells Fargo.
I agree with you 100%. I've said that also.
Wells Fargo has a bad reputation with their customers.
It's never
low
going to
NPS
leave.
scores. And they also did a $30 billion buyback program, which if they just didn't do that, they could have bought this $30 price target, which I want to push to you guys. If there was a $30 price target right now, would you sell?
Look, and you got to think about, I mean, when I think about the big four, the big
25?
four, Citibank, Wells, JP Morgan Chase, and Bank of America. Wells is arguably the number 4 in that category, in my mind at least.
Yeah.
And they need to do something. They're the least exciting out of all of them. They need to do something to get that younger demographic, and acquiring SoFi puts them right there. Like, I agree. They absolutely should have if they had the chance.
It ain't.
Some people are saying we're not selling at 30.
I'll sell a lot at 30. I'll keep some, but I would sell a lot, at least 75%.
I don't know that I'd sell at 30.
Well, no, like he's saying today. He's
I mean, look, I don't know.
Guys, I love you. I love you. I would take $30. Okay. I'd put that directly into Nubank. Someone actually said it in your chat before. Sell and buy new 100%. And then that'll double. And then I could buy back in to potentially Wells Fargo or something like this. And, enjoy all the gains from there. But I think that would be silly not to.
Look, if we got a stupid short cover that pushed it up in a matter of a short period of time, I think it's a conversation that I would have about selling and then buying back in. But if we're talking about getting to 30 in a year and a half from now, I'm not selling.
No.
Can we get to $100? It's not about, is there ever a time where SoFi can get to $30? That will happen. It's just how long will you have to wait for that price to actually be achieved? And in that time, are you having opportunity costs of not taking a buyout to put your money somewhere else where there might also be an additional undervalued price? Because let's say we had one share. Right now you got $10 in SoFi. You accept that buyout at 30. You put it into Nubank at 8, and then that can potentially double. Then you're taking that 30 and making it 60 very quickly, right?
Yeah, but with that logic, you're also saying you don't believe Noto can get to a top 10 financial institution, because even at 30, there's still room on it to go to 90 or 100.
How many years?
Well, and that's the question, because there is opportunity cost.
But that's all I'm saying. I do believe they can get to a top 10 financial institution. I believe they can get to $100 a share, but there will be time between then and now. And if someone's coming to the table at 30, forget about it.
I think Tommy nailed it. If you put that first comment up, you could either take 30 today, or you can wait, I won't say 10 years, but let's say, 5 years for 50. The opportunity cost tells you to take 30
today. If that's the choice,
right?
30 today.
I would take 30 today. Like if those were the only options, 30 today or 50 in 5 years, because even if you just put in an S&P index fund, you're gonna probably, or even the Qs, you'll do better than that extra 20 spread.
But
Right.
here's the thing: as a reminder for everybody, in case they didn't catch the previous week, we did our price predictions for end of the year and also the peak. I think most of us said actually that we might get up to 30s just because of a short covering squeeze mid-year or some point in the year. And the most bearish of us, who just left right now, Tevis, had a $20 price target at the end of the year on SoFi. That was the most bearish. So if we're talking about right now, $30, I would take it and run. I'd probably keep just a little bit there, but most of it would be gone. But if it's 30 at the end of next year, if SoFi does what I'm expecting, my price target's $24 at the end of the year. So I was like, I wouldn't sell at 30 at that point. And so just that it's that the partly it is the time that's coming in play, but the other factor, I think, is that there's a lot of opportunities on the market right now. I think fintech is going to have a phenomenal year, and I think SoFi is primed to have one of the best names in performing names in fintech for 2024. But yeah, if they're offered $30 and then I can put that into something else like a PayPal or a Robinhood, I'm going to do that.
Exactly, right.
It's not off next week. I'm pretty happy about that.
It's not like if you sell SoFi that you're not allowed to buy fintech and enjoy the ride. Like there are other names in the sector that will also do well. I know everyone loves SoFi, and I do believe that after a large amount of fintech conglomeration and consolidation into a couple big names, SoFi will be one of them that comes out on top. But opportunity cost is a real thing. Okay. And I just want to say how freaking excited I am for other fintechs like Nubank, for example. Everyone discounts how great that freaking stock is.
I prefer Old Bank, Wells Fargo.
Yeah.
Wells Fargo to the moon. Not really.
When does SoFi offer a dividend? We're back in the shareholder.
Don't get me started. Please don't get me started.
Bold prediction. They do not offer a dividend in 2024.
But this is a legit question.
None.
So,
But they will be asked every single quarter. Every single one of them.
is not
Every
gonna
earnings call.
offer a dividend anytime soon. Do not even think about it for at least, I'm not going to say that, at least 10 years, the way that they're talking.
It's going to be a while.
It's going to be a long time. And this isn't something that you get into for a dividend. You want a dividend, go buy Citi.
And as a shareholder with a growing company like this that is creating new products and also doing they handle acquisitions incredibly well at SoFi. And it's not perfect, but it's done far better than the average company. And you want them allocating this capital towards future growth, not towards sending out little dividends that are, I don't know, like a 2% yield per year or something like that to shareholders. You want that money to compound. And the best way is to trust Noto and the management to execute.
Why does Amazon not offer a dividend? They got a heck of a lot more capital than SoFi.
So Amazon was spending over $60 billion a year in CapEx.
Mm-hmm.
Yeah.
So when you look at their CapEx versus their competition, they were spending more in CapEx than Microsoft, FedEx, UPS, Walmart, and I think it was Target combined.
Guys, we're spending more on a
put that into simpler terms, though. Just put it into simpler terms.
They have better opportunities for their money. They have higher ROI, reinvesting in their own business.
They're reinvesting in their own business and they're focusing on growth. Exactly.
Yes.
That's the answer.
When you are generating a large amount of EPS, it can become a much different story. But that's not the case right now. And they're still in growth mode.
I think SoFi has an opportunity to make a Amazon level play in financial services. The technology platform, the ability to go after 500 million different checking accounts. There is an amazing opportunity here, and I think a lot of incumbents will be left behind. I don't think even after 10 years, if they consider still not offering a dividend, that might still not be an inappropriate choice. This is this is the revolution in their field of business, which is banking.
At some point, I do think they will offer a dividend because that's kind of the nature of the financial sector. And I don't think that they will be an outlier indefinitely with not offering one. But it's not going to come.
Amazon in retail would be a
Amazon's
outlier.
not necessarily a retail company. They're
I don't think
retail, they're
SoFi is necessarily a
logistics,
bank.
they're cloud.
We're off track. Look,
Yeah.
Mike,
So-
to answer your question, if your yardstick is Amazon, let's say Amazon offers a dividend next year, then you've got pretty much 24 years for SoFi in your model until they can offer dividends.
I'm not saying they're the. I don't think SoFi hits Amazon scale. I think that they have an
It's gonna be a
Amazon
long
effect
time.
in their sector.
It's
gonna be a
not
lot.
on the roadmap. It's not going to be anytime soon. That's all there
What do you
is.
think comes first, dividend or Zelle?
Stop it.
At this point. One going back to the acquisition, as far as the other direction, I mentioned it before that Noto and team handle acquisitions very well. I don't mind them doing this at all. Tevis made a prediction that they will do another acquisition, maybe a smaller one this year. They might. I'm thinking that they probably don't. If they do, it'll probably be in the second half. There's a lot of costs.
They'll do
associated. Two.
They'll do
Who they
two.
buying?
All right. Well, I'm
they
thinking
buying?
that they don't, just because of that new gap profitability that they want to protect. There's a lot of cost to it. Whether
Here's my
you're diluting
rationale.
your own stock, you have to be very careful. So they're not going to.
Here was my rationale. When we think about acquisition, we're thinking about like, oh my God, SoFi buying Robinhood or something stupid like this.
Yeah,
I would love that.
Really, what I'm talking about is buying a small mom and pop shop that can really help augment inorganic growth for Galileo's roadmap, for example. In the last 3 years, since 2020, SoFi has done 4 acquisitions. They have Galileo, Technisys, Golden Pacific, and Wyndham Capital. And so if you think about that, this company is acquiring companies left and right. Wyndham Capital was under $100 million, I believe. It was like
under
80,
70 million.
70 million. There you go. And so I could totally see an acquisition in the second half of 2024, a small one to help consolidate their cores. We know that by 2025, they want to have, basically most of their cores, if not all of them, in-house. And this can just help accelerate that timeline.
So yeah, they could announce that they're working on that, and then the actual acquisition hit in 2025. That would make sense to me, but it does take time to get approval from regulators, so that's very possible.
Like whenever I say they'll do two. Tevis is right. I'm not thinking they're going out and acquiring Apex, FinTech, and Robinhood, but I think there are a couple acquisitions like Wyndham Capital that can squeeze in there to make their tech better. And I believe that one of them will be in the technology platform for that credit card business. I know people want to scoff at it, say it's small. Credit cards are like the bread and butter of a lot of financial companies. To be a card issuing company and not offer like a faster growing segment than debit, where are we? So I think that if Marqeta couldn't make their own platform and they had to acquire, if Robinhood couldn't make their own platform, they had to acquire. Galileo might also see an acquisition, small grab, and then I'm just tossing in two just to be a little. I felt conservative, so I'll boost the numbers up. I bet we get two.
I love how you guys started very skeptical of all of my predictions, and by the end of the conversation, all of you more or less agreed with the predictions on SoFi buying a company.
Hold on,
the M&A acquisitions.
That's not what I'm saying.
Members.
hold on.
I completely disagree.
How was I skeptical of any of your predictions?
What's
I
that?
didn't say anything negative of any of your predictions.
No. I'm just saying these two.
No, you said you guys. You grouped me in with them. Don't group me in with Captain Referral over there.
You've swayed me on acquisition. I see your point. The others I still disagree with. So and S&B loans, which we didn't talk about.
I think your predictions were like softballs, man. Galileo announces a partnership with major legacy bank through a validated pilot program. They've been talking about this since they bought Technisys, and you're like, well, potentially they're going to what they guided for is going to happen. Well, yeah, me too, Tevis. So I believe you.
But to be fair, the 1 million quarter and then the 10 million members, that is not a softball. That is not a gimme. That I think,
and it's not something I think will hit,
except for Steven. Agreed.
And I'll tell you this: depending
SoFi
on
breaks into 60th largest bank, that'd be hard. That'd be a hard one.
That is, yeah.
Depending on what the acquisition size would be, I don't think I would mind being diluted as a shareholder. The same way I was fine with it with Technisys.
This company, I hold PayPal, and one of the worst things that they've done is acquisitions. They have handled them so poorly. So poorly. They had a lot of money. They just threw it, and everybody's like, oh, great, they're acquiring. This is going to be awesome. It's very hard to do. A lot of companies struggle with acquisitions. SoFi handles them better than just about anybody as far as acquisitions. Intuit is probably number one of any company that I follow that handles them. But yeah, if SoFi announces an acquisition, I'm on board with that. I don't care. It's like, oh, I'm wrong. It's like, great. If they get an Apex or a Robinhood or a mom and pop little credit card or something, I'm all for it. I trust this team. I trust this management. That's ultimately why I invested.
Another thing, Tevis, buyout offer by Goldman Sachs. Get out of here, okay? They said they're stepping away from banking. They want to go back into investment banking. Or sorry, I meant retail, consumer side, more towards investment banking. Get out of here.
You guys all agreed that we would see higher M&A activity for SoFi in 2024.
Did I agree to that? Let's roll the tapes.
We will roll the tape in the highlights. I'll make it.
I do think that we
This
see
is
more
Tevis.
activity or more interest. And I mean, Goldman would make sense on one side of it, considering you have
There you go.
Noto
You
as an
pointed to a guy like he's a
Goldman,
freaking
and you look at
Nostradamus. That doesn't mean
SoFi's
anything.
board. What is it? Their ex-COO is on SoFi's board. I mean, there's deep ties to Goldman there. But I think a more likely scenario would be Schwab or Morgan Stanley.
Yeah, or Wells
And here's-
Fargo, we just talked about.
Yeah.
Like what?
I said or Wells Fargo, as we just talked about.
I think they passed up their
The only reason
opportunity.
I wouldn't say Wells is because they definitely had opportunity in past, and they haven't made other acquisitions like Morgan Stanley or Schwab. Schwab just acquired TD Ameritrade. Morgan Stanley acquired E-Trade. They're obviously going after a different segment and trying to expand. Schwab, it would probably make more sense than Morgan Stanley.
Roughly how much were those acquisitions, though, Stephen?
We'd have to Google it. I don't know off the top of my head.
Because I don't think a 30 billion acquisition is outside the range of imagination for these large banks, especially if it's a stock.
I'll Google it right now. Hold on.
It's totally within reason. And we're so over our 1 hour, just so guys know.
So
right.
Morgan Stanley paid $13 billion for E-Trade. All stock deal worth $13 billion.
And the other thing to keep in mind is that we're thinking legacy financial player. I want to throw out another suggestion out there that you guys can disagree with if you want. This is a company that comes with a bank charter. It could totally be an acquisition target for somebody else that's not a pure legacy financial institution.
So Schwab bought TD Ameritrade for $28.3 billion.
There you go, right in line.
Tell me a single okay, you know what? We're going to take this discussion into the SoFi Weekly after hours. Tevis, you just reminded me.
Do you have a referral for that? Is there a QR code?
If you want... Huh?
So
Tevis, can you make him a QR code?
So it's basically, just to help Captain Referral over here, it's basically how you guys get access to that is you're watching on YouTube right now, right where it says the channel name. So if Tanner's, it's going to say Tanner.
No, that's difficult.
It's going to say me. Right beside, there's a join button. Click that, and then tomorrow you'll have access to the video.
You know what? I'm going to, in addition to the In Noto We Trust t-shirt, I'm going to figure out a funny-ass Captain Referral t-shirt with a QR code. I'm going to make an email address the QR code goes to. Maybe I'll even pay for a website. Like, we're going to get this up.
Okay. So let me just say really quickly, I've made it even easier for you guys. It's the top link in the description down below. All right. Thank you so much.
Referrals. Loves them.
And real quick, the discussion we had last week, it was phenomenal. I think we went 40 minutes. It was on AI. It's not something we typically discuss here. It is worth the price of admission. I get no cut from this. I've not been sponsored to say that, but it was great. I'm tempted to go back and watch it again myself. So
that's a good discussion.
And
Matt,
honestly, we barely get a cut after what YouTube takes. But
I mean, I do all this pro bono. So,
well, you guys get paid in that Canadian money, so that's no good.
Yeah. Okay. Thanks everybody for watching, and we'll see you next week.
Bye, guys.